Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on gold. We're going to start on the yearly, then the monthly, weekly, daily with bullish and bearish scenarios, and finally ending with the probabilities of the different scenarios per time frame. Starting on the yearly time frame, where here the bullish scenario is a finished 5-wave impulse to the upside in a wave 1, a finished wave 2 looking for a wave 3 to the upside, which of course can take many decades to eventually finish. The bearish scenario here would be an expanding flat in a wave A, B, and then a wave C to the downside, has lower probabilities. You also need a 3-wave structure to the upside in a wave B, and at the moment this looks very much impulsive instead of 3-wavy. So the highest probability scenario is a wave 1 and 2 that are finished, looking for a bigger wave 3. On the monthly chart, your first bullish scenario, which is the most bullish scenario, is a double 1-2. Here we have a finished yellow wave 1 in a 1, 2, 3, 4, 5. 3-wave corrective structure in a wave 2, which is confirmed as price took this high here, and then moving to the upside again in a second wave 1, second wave 2, continuing to the upside. Your invalidation is of course very clear. It's the low here at about 1K. Now what you see is that wave 4 retraced to the 0.382 Fibonacci taken from the low of 2 to the high of wave 3, which is a common target for a wave 4, so that's perfectly fine. But what you can also see is that this wave 4 here ended before the 1-to-1 fib time, and the fib time is taken from the start to the end of 2 to the end of 3, comparing to with wave 4. Now most commonly wave 4 ends after the 1-to-1. That's most commonly a wave 4 is longer in time than a wave 2. However, what you can see is that this wave 2 here is incredibly long compared to your wave 1. And if we think about the rule of alternation, it says that if wave 2 is very long in time, wave 4 has a higher probability of being short in time. So therefore, I do accept this wave 4 over here to be in, looking for a 5 to the upside in this particular scenario. With regards to this yellow wave 2, it bounced inside the 0.236 to the 0.382 Fibonacci area taken from the low to the high of your wave 1, which is a uncommon / rare target for a wave 2, as most commonly price retraces to the 0.5 to the 786. However, on these very high time frames, a monthly chart, it does work a little bit different. If you would go to the Bitcoin index chart and look at all the bull and the bear market, you will see that your first bear market only retraced to the 236. Your second bear market on the monthly retraced to the 382, right? And the most recent one we had retraced to about the 0.5. So even with those retracements, we didn't go really anywhere close to a golden pocket, right? So therefore, in this particular scenario, do accept this to be a potential 2, and then we're looking for wave 3 to the upside. But of course, then in that case, another 1-2 on the lower time frames. The second monthly bullish scenario is that you have the same wave 1, 2, 3, 4, 5, but now your wave 2 is going to be a lot longer. So you have your wave A, your wave B, and your wave C. So instead of this being a wave 2, this is now only a wave A. If we take a fib time from the low over here to the high of your wave 1 in yellow and we double click, then you can see that the low here is made before the 0.382 fib time. And even for a wave 2, it is quite rare to finish before the 0.382 fib time. So that would be something that at least gives some probabilities to this scenario for an ABC flat, but it does mean you want a 3-wave structure in wave B, and we need to see a local weakness, which at the moment we don't yet have, as I will go to the daily time frame soon. But at least you know what to look for here. So the common target for your wave B in an expanding flat ABC is between the 1.236 and the 1.38 Fibonacci taken from the high to the low of A, giving you a target between 2.2K and 2.4K. The 1.618 at 2.8K is a rare target for a wave B. If price can move towards the upside and hit 2.8K, it will significantly reduce the probabilities for an expanding flat, increasing the probabilities for the more bullish scenario. The target for your wave C, with the high at the moment here at 2.4k, is between 916 and 618. The two 1.618s are taken with a trend-based fib extension from the high to the low of A to the current high here, and the second 1.618 from the low to the high of B with the normal Fibonacci tool. After wave 2, we then want to see continuation to the upside in a wave 3. Now, what also is important is that this wave C should not be twice the length of A plus B. So if we take a fib time from the start of A to the current high that we have here, and we double click, put the fib time on the 2, then you don't want this wave C to take all the way till September 2049. So that will take many years. So before that time, we will have already a lot more clarity about what is happening. The bearish scenario here on the monthly chart is that you're looking for a wave 5 to finish inside the common target area for your wave 5. So what you're looking at here is a wave 1, 2, 3, 4, and now a wave 5. In this case, your wave 4 here is longer in time than your wave 2, which is most common. The low of your wave 4 is made just after the 3 fib time taken from the start to the end of 2 to the end of 3, which is perfectly fine for a wave 4. Also, of course, with the most bullish scenario, this being a wave 1, 2, 3, this low was made before the 382, which does impact the probabilities a bit. So it does look nice for a potential wave 4, where this structure to the downside here is a lower degree wave 4, matching one of the 2s in the grind here to the upside. Now, after that wave 4, we're then looking for 5 towards the upside. And there's a couple of ways to calculate the target for your wave 5. The first one is to take a Fibonacci from the start to the end of your wave 4 here, and then you toggle on the 1.236 to the 1.618. As you can see over here, the 1.236 is the low of the box at 2.2k. Then you can also take a trend-based fib extension from the low of 1 to the high of 3 to the low of your wave 4, and then toggle on the 0.618, and that is the high of the box at 3.6k. And alternatively, you can also still take a 1-to-1 from the low to the high of 1 to the low of wave 2, toggle on the 1-to-1, but as you can see, it is not above the high of 3, and a truncation in a wave 5 is very rare, where wave 5 then doesn't take the high of 3. So that's not something we're looking for. We already passed the high of 3 anyway, so this is your target area between 2.2k and 3.6k. After this high over here, you're then going to be looking for a wave 2 to the downside, which of course will take quite a while. For this wave 2, the target is taken from the low to the high of wherever your wave 1 is going to be. But if we select the current high over here, then your target most commonly would be between the 05 and the 786, 785, 410. Now we are on a monthly chart, and as explained, retracements can be a lot more shallow. The 382 is sitting at 1k, and if we also open the 0.236, which is quite uncommon for wave 2, but the target that we have to keep in mind nonetheless, 1.4k. After that wave 2, we then want to see continuation to the upside in a wave 3. The bearish scenario on the weekly time frame is that we're looking to finish an impulse to the upside, 1, 2, 3, 4, 5, and after wave 5, expect a bigger retracement to the downside. Now, when we observed these ranges here, you can see that price in both occasions hit the 886. So it was quite obvious that the probabilities from an Elliott wave point of view were higher to eventually take the high, even if price retraced to the downside, because the 886 is a rare target for a wave 2, common for a wave B or a wave X, meaning that the probabilities are much higher that this move to the downside is corrective in a wave C or a wave Y, which increases the probabilities to sooner or later move back towards the upside to take the high, which happened in both occasions. So that is very nice indeed. Now, if we compare wave 4 in time with wave 2, then you can see that wave 4 ended just after the 1-to-1 fib time taken from the start to the end of 2 to the end of 3, which is also what you like to see. In this final leg to the upside, we then want to count an impulsive structure, 1, 2, 1, 2, looking for a 3, and then a couple of 4, 5s to then finish the blue 5. For your yellow wave 4 here, counting a wave 1, 2, 3, 4, 5, your invalidation is the 0.618 here on the chart in yellow, and that one is taken from the lowest point of wave 2 to the high of wave 3, sitting at 2.1k. If price is retracing to the 618, it invalidates this wave 4. We then also get quite close to the invalidation of the white count, which is a 1, 2, 3, 4, 5. That's your higher degree count, because inside the white wave 3 we have the yellow count 1, 2, 3, 4, 5. So the invalidation for your white wave 4 is the 0.618 here at currently 2k. Now if price is going to continue to the upside, then the invalidation in white is going to move towards the upside as well. With regards to the yellow count 1, 2, 3, 4, 5, most commonly a wave 4 takes longer in time than wave 2. So preferably your wave 4 is finishing after the 1 to 1/5 time that you take from the start to the end of 2 to the end of your wave 3. Toggle on the 1-to-1, and the 1-to-1 is sitting on the 17th of June 2024. So preferably you're going to see a range that is the size of wave 2 minimum in this wave 4 before labeling this a wave 4. If we get ranges that are shorter, then it might be the case that this wave 3 is not yet finished and is going to move to the upside, and so is the 4, and so is then the invalidation in yellow, right? But at the moment, because of this range over here, I prefer to count this as a wave 2, and then the potential is here for a wave 4. Invalidation is clear. So we would still expect on a weekly chart to see more upside on gold, finish a 5 in yellow, therefore finish a 3 in white, look for 4 in white, then 5 in white, 5 in blue, finished here, and then get a bigger retracement to the downside. The most bullish scenario on the weekly time frame is a double 1-2. Here we have a wave 1, finished wave 2, moving to the 618, the golden pocket, good target for a wave 2 as well. Then we have a second leg to the upside, wave 1, second move over here, wave 2, and we look for continuation to the upside. Now what you can see is that the second wave 1 to the upside is a lot longer in both price and time compared to your higher degree wave 1 in blue, because in blue, which is your highest degree Elliott wave count, you have a wave 1, 2, 3, 4, 5. Inside the blue wave 3, we are counting the white count, which is a wave 1, 2, 3, 4, 5. So that is a lower degree count, and preferably in a double 1-2 scenario, you have your wave 1 and 2 of a higher degree, and then your 1 and 2 of a lower degree are preferably a bit shorter in time and price. It is not an invalidation, it's just probabilities. The fact that this second wave 1 is so long in price compared to your first one, and also longer in time compared to your first one, decreases the probabilities for this scenario, which therefore puts more probabilities in the basket of the weekly bearish scenario. Now what we're looking for here as well is the vertical line on the chart, so you can actually see that this wave 2 in white is longer in time than the wave 2 in blue, because this fib time taken from the start to the end of the blue wave 2 to the end over here of the white 1, you can see that the lows are made after the blue 1-to-1 fib time. Now what you also see is that this wave 2 retraced to the 0.382. This one here retraced to the golden pocket taken from the low to the high of the blue one, which is a common target for a wave 2. The 382 is an uncommon target for a wave 2, so that also affects the probabilities. In this scenario, if this is the low of your wave 2, you're eventually looking for a big wave 3 towards the upside. Of course, you could have another lower degree 1-2, of course, but by all means, we're eventually looking for price to move up. And if we do finish eventually a wide wave 3, which should be very extended, as most commonly, a wave 3 is the longest, strongest, and most impulsive wave in an impulse. So you really want to see price flying with a high amount of volume to the upside as well, which is another thing, because yeah, we do have at least some volume increasing, but if we are moving into a 3, we definitely want to see a very big surge towards the upside on the volume indicator here, the standard indicator on TradingView. But if we're looking for a 3 and then a wave 4 to form, then your wave 4 invalidation is going to be that same 0.618. So you take it from the low of 2 to wherever the high then is going to be of your wave 3, and as long as price is moving up, the 618 is moving up. Now keep in mind, a potential lower degree impulse to the upside can be a lower degree 1, lower degree 2, right? So you have your 1, 2 in white and then create another 1, 2 continuation, where for this wave 2, the 618 is still a common target. However, in that case, we need to see a finished impulse. So we need to see a finished 1, 2, 1, 2, 3, 4, 5, 4, 5. So on the weekly time frame, we would still expect price to move up and up and up, and then eventually get a retracement where this can be a lower, even lower degree than the white count. Wave 1, wave 2, continue towards the upside. But once you get that big extension, that is when you're going to be looking for the white 3 to finish, look for 4, and then this is your invalidation. On the daily time frame, zooming in again, your bullish scenario is a finished 1, 2, double 1, 2. So here we have the same case, right? 1, 2, 1, 2, like on the weekly, but this is more local, of course, on the daily. So what we're looking for here is a 1, 2 in blue, 3, 4, 5, impulse finished, voila. Then we have our wave 2 to the downside here, right? Second wave 1, second 2, continuation to the upside. Now in this case, we are then looking for the blue count to finish first, because the higher degree count is the green count in a wave 1, 2, 3, 4, 5 in green, and inside the green wave 3 we have the blue count 1, 2, looking for then 3, 4 and a wave 5 to the upside. Of course, I can also put the 0.618 for blue on the chart, but what I've done for now is only keep the green one on the chart, which is taken from the low of 2 to wherever the high of the green wave 3 is going to be, right? Because we still expect price to move towards the upside in this particular case. If price moves to the downside and hits the green 0.618 here, which is sitting at 2K, it would invalidate this scenario. So pretty much what we want to look for is a wave 3, maybe it's finished, right? And we're looking for a 4 here. Let's have a look at time as well. Take a fib time from the start to the end of 2 to the end over here. Now preferably, we know that a wave 4 is ending after the 1-to-1 fib time, which is sitting here on the 21st of June this year. So preferably we continue this range. And if we take a fib from the low of 2 to the current high of 3 to check for the targets of the blue wave 4, then the common target area for your blue wave 4 is between the 236 and the 05 Fibonacci, and maybe to be safe I take it from the lowest point in this wave 2 here, and then the target would be 2.3k to 2.2k, with the invalidation for the blue wave 4 being 2.1k. so that is an area of interest, right? So what I can do is remove all of this, make this one blue, right, and then right inside invalidation, and that is then color coded to the blue count on the chart as well. So that is an area to keep in mind. We don't yet really want to hit it, right? We are preferably looking still for 1, 2, 3, 4, 5. This range over here being a wave 4 compared to this 2 has low probabilities because of time, and also it looks better as a 1, 2, 3, 4 and maybe a 5. So possibly your 3 is finished, you look for a 4 and a 5, but by all means we look at least for another high in this particular scenario on the daily chart. We do have enough space to the downside still, right, as the invalidation is 2.1k. After eventually your green wave 5, you then look for a bigger retracement to the downside. The bearish scenario on the daily time frame is a flat structure, which is pretty much the only bearish scenario I can really think of, and it's not even really in context to what we have over here. You can see I literally only counted this part because having such a big flat structure would then 1, 2, 3, 4, 5, right? So we then have to label this a wave 4. So wave 1 and then 2. And then 3, and then we can take a fib time from the start to the end of your wave 2 to the end of your wave 3. And what you'll notice is that, of course, in this scenario, your ABC flat is very, very long, but you do have enough time left, right? So before probabilities are significantly reduced time-wise, that a potential flat here is a wave 4, we have to move to at least a 4-fib time, which is, I don't know, like a couple of years, right? Even on the daily time frame, it doesn't even show me a day. So will take a lot of time. However, by all means, the reason I didn't put all of that detail on the chart is because wave B touched the 1.618 Fibonacci taken from the start to the end of your wave A, which is a rare target for B and also lowers the probabilities for an expanding flat ABC. So just because of the touch here, probabilities are lower. You don't have to do like too much other analysis. It's just the way it is. 1.618 is touched here, lowers the probability. So if we then talk about the probabilities of the different scenarios on the different time frames, then on the yearly time frame, the highest probability scenario is the bullish scenario. Finish 1, finish 2, you look for wave 3, which of course can take a very, very long time. On the monthly time frame, the primary scenario at the moment, the highest probability scenario, is the monthly bull / monthly bear. So in other words, if we zoom in to the monthly time frame, then currently the highest probability monthly scenario is the one that you see on the chart, the monthly bullish scenario, looking for 1, 2, another 1, another 2, and then continuation to the upside, or / the monthly bearish scenario, which is finishing a 5 and then down. Now the price section between these two scenarios is going to be exactly the same. That's what I say here. It's the same price section, right? It depends eventually on the retracement that you get, because in both of these scenarios, in a double 1-2, you're looking to finish a wave 1 and then a corrective structure to the downside in a wave 2. Invalidation is very clear. In the bearish scenario, finishing 5 and therefore 1, you're looking for a bigger corrective structure to the downside in 2, where you can move below this wave 4 here, which is about 1K, right? So price action is pretty similar, where locally you still look for a bit higher, but eventually a rejection to, a retracement to the downside, and then it depends on the retracement which scenario will have the highest probability. But at the moment, both of these scenarios have the exact same local movement of price. Moving up, finish 1, moving down in 2, and in the bearish scenario, moving up, finish 5, moving down in 2. If, however, price is going to continue to climb and move above 3.7K, it will reduce the probabilities for this scenario, right, and increases the probabilities for the more bullish scenario. So that is something that we can keep an eye on. The secondary scenario, right, the lower probability scenario, is the month bull 2 scenario, as the folder is called, which is the flat scenario in a wave A, B, and a wave C. Also here, of course, you would expect a rejection to the downside. In this case, then you're looking for an impulsive structure to the downside, because wave C has to be a 5-wave move, 1, 2, 3, 4, 5. So on the lower time frames, on daily, you need to count an impulsive move to the downside. At the moment, we move up. We are in the common target for B. If price moves up to 2.8K, reduces the probabilities for this particular scenario, which at the moment has lower probabilities anyway compared to the other two. On the weekly time frame, jumping to the weekly here, the highest probability scenario is the weekly bearish scenario, where we are looking to finish, in this case, a wave of 5. Now, what is ideal is that you still, compared to the weekly bullish scenario, you're still looking for at least price to move to the upside in the upcoming weeks, months. In this particular case, right? And we have a very clear invalidation. So if price does move down and hits the invalidation, well, then we're going to be looking for price to go to lower prices, right? Likely going to have a much bigger corrective structure to the downside. So even in the bearish scenario, which is the one on the chart, we're still looking for 1, 2, 1, 2, and then 3, 4, 5, 4, 5. So at least 2 more pushes to the upside. On the second place, we then have the weekly bullish scenario, which is a double 1-2. Now, you may have seen it coming, but the rules are just a bit less respected here. Your second 2 is longer than your first 2 in time. Your second wave 1 is longer in price and time as your first wave 1. Your second 2 retraced to the 382, which is an uncommon target. So naturally, the weekly bearish scenario has a better fit. And then on the daily time frame, All right, the higher probability scenario here would be the bullish scenario, where we are then looking for price to move and continue to the upside, right? Same as on the weekly. So we have the 1 2 1 2. We look for a 3 4 5 4 5 to finish the green 5, and then look for a bigger retracement. The invalidations are very, very clear as well. And your second scenario, lower probabilities, would be a flat structure in a wave A, B, and a wave C, because the 1.618 is rare for a wave B in a flat structure. So yeah, this is everything that you need to know about Elliott waves on gold from the yearly time frame to the daily time frame. I hope that this video was helpful or valuable to you. Now please check out the most recent educational video I've made about the best trading indicator that I think you can use, in my opinion, which is the CVD, that I mainly use for Bitcoin, but can also be used for altcoins, as this channel is mainly focused on Bitcoin, and every Sunday we have an altcoin live stream as well. So for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.